Alrighty. Welcome to the midweek fundamental and technical analysis. I'm Mr. Levels, aka Pips, and we gonna get into this analysis. Looking back at Monday night, I told you guys that I wanted to see how price action reacted to last week's PD array, the premium PD array that is. That's the level that we was at Tuesday, or should I say the level that we ran Tuesday, right? We ran up into there and notice how uh price ran up into that PD array and failed to reach consequent encroachment of that PD array, which is 50% of that PD array. And we can see we formed a power of three right there on the daily time frame. And today we closed below that first candle that started the formation of that power of three. So for the rest of the week, this is what I'm expecting out of Dixie. I want to see us reach down into this daily fair value gap that we see right here that was formed on Thursday of last week. Right? I want to see us reach down in here to close out the week. That is what I want to see. And Monday. So I'm expecting us to pull down into this daily fair value gap to close the week out for Dixie, right? I wanted to see how we reacted to the 62% weekly PD array. We respected it and we shifted away from it today, shifted lower, expanded lower. And I expect to see us continue to expand lower for the rest of the week. So with that being said, let's look at our currency pairs. If I'm expecting Dixie to extend lower, then of course, you know, that means I'm expecting our currencies to extend higher. I told you guys Monday that I wanted to see us fill in this imbalance for Euro USD and see how we reacted to the fill of that imbalance. We filled that in yesterday. And today we shifted back to the upside. So I had this daily fair value gap marked out for you guys Monday night, and I told you guys that if we did come down into this level and respected this structure that we had over here, and if we respected this imbalance, that I wanted to see us pull back up to retest that daily fair value gap. So that's what I'm expecting to see out of Euro USD to close the week. I'm expecting to see us reach up and run back into that daily fair value gap. Same thing for GBP USD. I told you guys that I wanted to see us retest the weekly PD array um, to see how we reacted to that low level, that lower level when we retested it. We ran that Monday, right? Yesterday broke back above it, right? Forming this little power of three on the daily time frame. I shouldn't say little power of three, but forming this power of three that we see there and breaking back to the upside. So now I don't want to see us break back below the 62% discount level that we see here that we just broke back above. It's okay if we come back down and retest it, but I would like to see a big reaction to that level, back up to the upside to run back up into this city right here. So that's what I'm expecting to see out of GBP USD. There we go. All right. So that's what I want to see out of pound to close the week. Um, for NZD USD, same thing as pound and euro, right? I want to see us close out the week pushing up. That's what I want to see because I do expect the dollar to continue to expand lower. So I do want to see currencies close out the week expanding higher. Um, Let me just do this right here. All right, just for my peace of mind. There we go. So I wouldn't mind seeing NZD USD expand at least 75 pips to the upside to retest last week's premium array. That's what I would like to see out of NZD USD. Um, Same thing, of course, like I said, for pound. Just let me throw these PD arrays on there right quick. Yeah. So I would like to see us expand back up into that weekly PD array for currencies and for Euro USD. I want to see us pull back up into this daily fair value gap. Right? Looking at metals, I want to see us continue to expand higher. Of course, we know metals inversely correlate with the dollar, so we're expecting the dollar to close the week bearish. So I want to see us close the week expanding to the upside for metals. That's across the board for silver and gold. Looking at oil, we are getting that expansion that we've been waiting for to the upside, right? So if we come back down to retest $75, I will long that up to run into this weekly fair value gap, right? And then once we get above that, I would like to see some support there, right? And if we get that support, then I'll be longing up to $100 from there. So we are in the money for oil and waiting for that retest or the run of this weekly fair value gap and the support, and then run up to 100. Looking at futures, looking at ES, I'm expecting us to close the week expanding higher. I was wanting to see a bearish week for futures, but as you can see, we've been climbing higher since Monday. Today with FOMC, we did get a pull back down to Monday's PD array. Um, and we didn't even retest it. We came within a couple of ticks of it. And we snapped back above Monday's buy side liquidity to close above that for the day. So I'll close edit. So I am expecting us to close the week. Well, this is what I'm gonna say. If we break back below Monday's buy side liquidity, um, for four. before New York market opens. If we break below here going into London, right, then I would expect us to still pull back down and run Monday's discounted rate. However, if we stay above this buy side liquidity going into London, then I may expect us to close the week expanding to the upside. And that's across futures. So for Dow, if we let me see something on the weekly right quick for Dow. Hmm. Yeah. So if we close below last week's buy side liquidity going into New York, then then I expect us to pull on down to last week's PD array. But if we stay above it, same thing that I'm expecting out of um ES, I expect out of Dow as well for us to keep expanding to the upside. So keep your eyes out for that. Uh, Looking at NQ, I'm on the sideline for EQ for NQ right now. I don't have a bias because I don't know what it's going to do, and I don't see anything that looks obvious. It's already below um last week's buy side liquidity. It ran last week's sell side liquidity. Um, if I just had to choose a bias, then I would still want to see us expand to the upside and run last week's buy side liquidity since we ran last week's sell side liquidity already. I expect us to close the week and run that last week's buy side liquidity. So that would be my bias if I had to choose a bias. But I don't really know which way. If it's in line with futures, I mean, if it's in line with ES and E-mini Dow, then it should expand to the upside. However, it may pull back down to retest um, the previous week's PD array before we see that expansion to the upside. So for NQ, I have to see some confirmations before I choose a bias with NQ. Last but not least, cryptocurrencies. Biddy's making her way back down to the level we want to see retested at 28,450. That's what I want to see to close the week, as well as Ethereum coming back down to test 1821 and continuing to dollar cost average in um, ApeCoin if it drops down to $1.50. So that will conclude the midweek technical analysis. At this time, I'll pass it over to Carmen so she can give us the midweek fundamentals. It's all yours, Carmen.
So I am going to keep it super simple because, um, man, um, let me just show you guys something. When you are a PhD and you have a whole bunch of letters behind your name, doesn't it feel so wonderful to have gone to school for a long time and people know you can read a book, but you don't have any common sense? Because I typed in Federal Reserve just because I was too lazy to type in federalreserve.gov. But I also wanted to see what people were saying about the Fed because we had Fed news today. And I see these. Federal Reserve gives up predicting a recession. Recession not in the latest Fed staff forecast. Fed no longer forecasting a recession. Well, it's not that they aren't forecasting a recession, because if you actually read through the minutes clearly tell you that they are anticipating a recession. But it's this headline right here that's like the most correct. They give up predicting a recession. They can't do it. And for the life of their kids and their wives and husbands, they could not tell you, because if you actually look at every time we've had a recession, it's always been after the fact where they've said, oh, yeah, we were in a recession. Well, they can't tell you that we're in a recession while we're in it. It takes us going through the recession and looking back like, oh, yeah, you see what the economy did? Yeah, we were in a recession then. Listen, when you live in a gated mansion and you can stick your nose up in the air and probably touch the moon with the tip of it and walk around and say you're a PhD from whatever Ivy League school or whatever facility you want to claim you're from, and you work for the Fed, like, slap yourself, because you can't tell us anything about anything when it comes to the economy. Like, all of the common sense things that we use as indicators when it comes to looking at the economy, I don't believe a PhD in a world that has a PhD in economics when they tell me, oh, yeah, recession, blah, blah, blah. Why? Ask them why. Ask them to give you the details of why they're coming up with the conclusion. Also ask them why they allow this current administration to quote unquote change the definition of a recession. So what are we even looking at when it comes to a definition of a recession? So they probably can't even tell you that. Biden can't tell you what a recession is. No one can tell you what a recession is, but hey, we're not heading for one. We can't predict it because you don't even know what you're trying to predict now. It's like a weatherman going outside, licking his finger, sticking his finger up in the air, saying, you know what? It may or may not rain today. Or, wind's blowing. Can't really tell you what direction, but it's blowing. All right, cool. So, anyway, today we did get a rate increase. Um, my thoughts on this is, I mean, we knew it was coming, so we just didn't know exactly which meeting, probably this one. We might get a hold and a raise on the next one, or one by the end of the year. The thing about the Fed is the Fed either doesn't do enough or they do too much. They can never just get it right on their first try. So my prediction for what's going on right now is that they're overshooting the market because there are too many economic indicators that don't line up, that are contradicting each other. And if you look at the economic indicators that align with recession, they're signaling a recession. If you look at the one that we always talk about, the one that's most obvious to most people, yield curve. If you look at the yield curve signals recession. If you look at services, versus, like, if you look at the manufacturing sector and you start to pick it apart. So let me see if I can actually go back and find the news so that I can actually show you right here, services and manufacturing. All right, so you have, in all of our previous recessions, if you go back and look at services versus manufacturing, manufacturing, despite what you see here, is actually not doing all that well. The manufacturing sector is just one key component of what gets looked at when it comes to businesses, when it comes to GDP, looking at that portion, is broken up. So if you pull out sectors, you look at services and manufacturing over the past several recessions, actually all of the recessions we've had, manufacturing has always slid. We've always had a decline in manufacturing. The trend has always aligned that manufacturing shows recession indicator better than services does. So anyway, You can look at those things. You can look at not only the exports side, so like the GDP, you can look at like the GPI, so you can look at income that we get versus what we spend. That often gives you a really good heads up as to what things look like in the economy. And a lot of people might say, well, the last numbers look great. The last numbers were not that bad. The last numbers, I honestly don't care about the last numbers. I honestly don't care about the numbers before those or the ones before those. I actually care about the last 12. Like, I want to see a trend. I want to look at where the market is heading because you can look at individual numbers paint their own story individually, but when you start to put them all together, you really get like the big picture and you start to see where we were and where we are. And um anyway, I honestly don't like the fact that yes, a lot of these numbers that we tend to look at, a lot of the numbers that we tend to sift through and try to nitpick, um are manipulated numbers, and they can be manipulated. People say numbers don't lie. Yes, they do. They lie a lot. They lie a lot, especially when you have a PhD and you can make a chart look like magic, $1 million to someone who's not educated in economics, aka the media, and they'll paint whatever picture you put on the canvas. Doesn't matter if it's true or not. Guess what? You painted the picture. They see the picture. They see an interpretation of your picture, or you can just flat out tell them what the picture means and then they run with it. Doesn't even matter if it's true. How many people are going to sit there and read through 40 to 60 pages of economic jargon and charts and graphs and stuff to try to figure out whether or not you are lying? I mean, I do because it's fun. Nobody that actually reports this stuff is actually going to do it just because it's like it's tedious, it's time consuming, and why do it? So lately, we've had all these news things come out. You have crazy headlines like these, and you have a stock market that responds. The one thing that came out of the Trump administration that is like super frustrating right now is the fact that people rely on looking at the stock market as an indicator to how healthy the economy is. The stock market is telling you nothing about the economy at all. Nothing. When you look at the stock market and you see, oh, the Dow is up, the Dow is down, S&P is up, Nasdaq's up. Like when you're looking at these things, that is purely a form of speculation, especially now, based on the fact that people have hope that this is where sentiment comes in. The market right now is purely sentimental. There's nothing that has any kind of fundamental basis to it at all when it comes to the stock market. No reason why, when you compare pre-COVID, COVID, and stock market now, why the market should be way off compared to where we're really supposed to be. You have market evaluations that are like astronomically crazy. You have people jumping on a bandwagon based on a topic that just influences the media, influences the market, and people feel like there's no way. It's like the housing market back in the early 2000s. People felt like there was no way housing prices were going to go down. People feel like now, because companies are able to quote unquote survive, barely, but survive post COVID, going into a recession. If you're a person who actually believes we're going into a recession, then it'll be like, oh, okay, well, we have these companies that are actually surviving, they're thriving, they're expanding, they're coming out with new products, they have all these ads out. But people really don't realize that on the business side of things, when it comes to a shrinking economy and businesses that have to pull back in spending, they have to compensate somewhere. So you have to target a new audience, and in targeting a new audience, you sometimes do the really um potentially dramatic media ad campaigns. You advertise and put ads out when you've never done it before. um you tend to, if you don't cut staff, you tend to cut back on different areas where you have staff. consolidate people, cut benefits. You in the case of a couple of corporations, they say, hey, you can work from home. And employees love it because they're like, hey, we'll work from home, not realizing that there is like psychological and just like generalized studies that have been done about people who work from home. If you tell a person instead of working 5 days, you can work 4 10-hour days, they work harder, more, they put forth more time. And then not only that, but you get a chance to cut back on a lot of the localized spending that you would have had having employees in the office. So a lot of the corporations that had meal services coming in, the coffee, the paper, like all these little things that you don't realize over time, though they add up. Corporations don't have to spend out that money. And so, any way possible where you can find different areas and you can find cost saving measures, they're going to do it. So, um, I feel like when you really think about those things, and then shrinkflation, we've talked about it before, but I feel like it's very warranted now. So, if you look at the size of packaging for items that you bought prior to COVID, and now I'm pretty sure that the package is going to be relatively the same size, but the amount that it holds is going to be smaller, or there's going to be a fewer count in the box if it's something packaged like that. And the price is going to be relatively the same compared to post pandemic, or they would have cut prices compared to the post pandemic or compared to the pandemic price. They would have cut prices, and they wouldn't have cut them quite back as far compared to pre pandemic, but cut them enough that you feel relief, but at the same time, there's less. And if you did the calculation of cost per ounce, cost per item, you'll find that you're paying a lot more because packaging is smaller. And I'll give you a quick example and then I'll go back to the stock market. So, like protein shakes, I buy them by the case. They usually come 18 into like the case that I get. Now, one place has them 15 bottles in the case. Another place has them 12 bottles in the case. So when I started doing the calculation, I was paying $1.56 per bottle. If I get them now 15 per case, it's $1.75, and 12 per case is $2.08. So you when you do the calculations like that, you see like, oh, I am paying more. Even if the price per case might stay the same because there's less, you're just paying more all around. And corporations realize this, and the more that they can do it, in the short term, their earnings are going to actually look decent. You do have some companies that can't do that, and their earnings will suffer a little bit, but they have to entice their shareholders, their fans, people who just love their brand in general, that they have something in store or they're working on something. So it's almost like the carrot on the stick type analogy that you could use for what they're doing. So um, anyway, it's easy to stave off a recession, or it's easy to stave off the appearances of a recession when you have corporations that can manipulate, when you have the Fed that can manipulate, and when you have the media that just outright manipulates all the time. So anyway, I encourage you to go through, just read this Fed statement that was put out. The Fed is still going to target this 2% rate of inflation. Um, we all know why. If you don't remember why, it is because they target 2% because of the payouts that they have to do on a monthly, bi-monthly, or weekly basis to certain beneficiaries of government programs. So If they were to raise that rate, that means they have to pay out more. What's difficult about paying out more is the fact that we already hit debt ceilings with the amount that they currently have to pay out. So that is why it will not surprise me at all. And I actually anticipate the fact that the IRS is going to become very, very strict when it comes to taxes. Tax rules and tax law will change so that the United States can generate more tax income to help offset the burden of the payouts that they have to make, and that people are going to continue to vote for representatives who encourage more government spending. If you are the person who says, I'm fine with the government spending, I like government spending, I don't like cuts to government spending because it cuts a program that I could potentially benefit from, great. You get money from the government, but then they're going to tax you on the back end and take what you could have made up for or even more. So I'm not necessarily telling you who you have to vote for, but I'm also telling you to not necessarily look in the direction of where you could get a handout. Look in the direction of what's going to benefit you on the back end, because, when you go to work, you get a paycheck, you have taxes taken out. You go to the store, you buy items, taxes are taken out. You have property, taxes, car, that's part of property taxes. But anyway, you get the point. Like, if you have a house, a car, if you go to work, if you go to the store and buy something, like, you're being taxed all the way around, and it's not really a help to the person who's trying to save money. And currently, bank rates, I'm just going to say a few more things and I'm done. Bank rates are fairly high compared to where they were um, pre-COVID. If you are of the thought process that, you have money sitting around and you want to have it doing something for you, having it sit at home, first of all, is not the best thing, because pulling lots of money out and just having it sit at home, you're not getting any of the benefits of the current market right now. Um, if you have sat on the sidelines for this long and you haven't done anything with your money, continue to sit on the sidelines, because jumping into a market that is already double topping at previous highs and gambling on the fact that the market could potentially expand when we're getting ready to go into um, especially the end of this third quarter and start the fourth quarter in a year prior to a presidential election, and the uncertainty of our officials, Mitch McConnell and Joe Biden, with their health scares and anyway, whatever, just Google it, you'll see it. All of that kind of stuff, you just don't know, because um you just don't know. I'm going to leave it at that. You don't know. So study and understand the rules of secession for the United States, because we have quite a few older Americans in office who might not be able to fulfill their duties and or get reelected. Just know who's to come next. That's all I'm saying. Um, and yes, that is the best case for term limits and age limits as well. I really do, again, encourage you guys to go through and read what the Fed says whenever they say something, especially when it comes to things like inflation, interest rates. And then you guys can also kind of anticipate what's to come later in the year. The other thing I encourage you to do too, especially if you are interested in the stock market, go through and really study and look at sectors. Like, don't go through and pick individual stocks to start. Like, just go through and look at each sector. Go through and look at energy, look at consumer discretionaries, look at financials. Go through and look at different sectors and actually how they performed going into a recession and while in a recession. because those are going to be areas where you can plan reasonably to put money or to take money away from, but have a plan in place for that if you decide to be a stock market person. When the stock market is down and when you're looking and you're like, oh, the Dow is down or the S&P is down, not everything in that index is going to be down. um there's never, well, I was getting ready to lie. It is rare that you will have every market down at the same time. And it's rare that you will have every stock down at the same time. There are instances where it does happen, but at the same time, I want you to realize that there are opportunities in the market. You just have to be wise and you just have to be vigilant. And of course, I know this gets said a lot, but it's super true. Do your own research. And this is my last thing and I'm done. I know a lot of people say, well, how am I supposed to do my own research if I don't know what I'm supposed to be looking at and what I'm supposed to be doing? Um, some thoughts and some questions about doing your own research. Research it like you would research anything else. If you were going to go buy a house in a brand new neighborhood or a brand new state or a place you've never known, like you have a generalized idea of what you want to know about that area. Crime, schools, how close it is to the highway, how close it is to shopping. You have a generalized idea. So when you want to look at a stock, even based on things you've heard in the past, like, okay, I want to be a dividend investor. Okay, well, does that stock pay a dividend? How often does it pay a dividend? What is the yield for the dividend? Like, so you already kind of have an idea of what you need to research. And don't overcomplicate it. Like, you can really, really make it hard for yourself, or you can make it super, super easy. You just need to know the company, how to find out any information about the company that you want to know. Read about the company and find out if it's a good company. How will you know? Same way you'll know if your household is good. Like, what do they say about themselves? Are the things that they say, are they positive? Is there some skepticism about how their future is going to look? Do they sound unsure? If you about your finances within your own house, think about your emotion behind that. Have that same emotion whenever you're looking at these companies. So doing your own research is just pretty much starting with what you already know and have a general sense of and going from there. Words and terms that you don't understand, go into that research and they will often point you in the direction of where you need to go. So I hope that helps and I'm done.
Awesome sauce, cool beans, saucy. We appreciate you, Corman, as always. We know you got a lot going on. I was telling the group with your studying and school and things you're trying to accomplish in your life, other outside of teaching this class. So we really appreciate anytime you bless us with your presence and your profound knowledge on the economy. We really appreciate you taking out the time to come and share it with us. So thank you for that sauce. Thank you for sharing. And yeah, we're gonna keep it pushing everybody. So with that being said, I appreciate everybody tuning in tonight, coming out, getting this knowledge and empowering yourselves. Let your family and friends know you love them while they're still here. Wait, hold on. I gotta take any questions. I'm gonna stop the recording and take any questions, you guys. But as always, peace and love, everybody.